So is this time different, or are things totally changing? Bring back Matt, lead analyst at Bitcoin Magazine Pro, to talk about that. Now, we've already talked about this previously. I will link the old video in the description. But Matt, let's update some people's info, and welcome back to the show.
Yeah, so first and foremost, thank you very much for having me. It's always a pleasure, and the engagement and just reaction and feedback last time was amazing. So your audience is great, so genuinely a pleasure to be here. I'm hopeful we can do it again in the future. But yeah, let's dive straight into it. Is this time different? I'm sure you get comments on every single video. Are we going to have a 4-year cycle? Are we going to have a blow off top? Are institutions changing everything? So we can kind of dive into the data and try and take an unbiased look at this. Of course, everyone has their own expectations and beliefs and biases that they want to come to fruition, but let's try and take a step back, just look at the data. So first and foremost, I've got this chart here, which is nothing too exciting. It's just looking at the BTC growth since the cycle lows. So this is comparing the current cycle, which is the black line here, to the 2 previous Bitcoin cycles. Now, a big question on everyone's lips is, are we going to have another 4-year cycle, or is this going to be a lengthening cycle? Well, currently, as we kind of line up the 2 previous cycles, because they topped out at pretty much the exact same time, just a few days or a week or so apart, if we are to follow this pattern of 4-year cycles as we did for the previous 2 cycles, then this cycle would top out at around October 20th this year, just around a month's time as we're filming this. So is that going to happen? Well, ultimately we're not going to know until afterwards. In hindsight, hindsight's always great, it's 20/20 vision, but is this cycle going to be different? Yes and no. I do think because of the stagnation we've potentially seen in US monetary policy, the FOMC meeting potentially delaying rate droppings, which maybe should have come a little bit earlier, has potentially broadened this business and liquidity cycle. I think as Bitcoin has grown as an asset, we've kind of moved off of the traditional 4-year cycle, which was driven primarily by the halving event. The inflation rate dropping 50% obviously has a huge impact on the supply and demand economics of the network. But now we're at a point where 95% of all Bitcoin that will ever exist are already in circulation. So the main thing that's really driving Bitcoin, and as much as we like to think that Bitcoin's decoupled and we're going to be this unique digital gold asset that just moves freely and independently of anything else, realistically, we're probably still going to be following the global liquidity cycle like we have done for the past few Bitcoin cycles as well. And what we can see is with this US monetary policy changes, with these rate cuts, this is likely going to lead to the US dollar strength index, the fiat currency, the US dollar itself decrease in its purchasing power, diminishing purchasing power, and this is likely also going to lead to an expansion in global M2 money supplies and accelerate this fiat supply to the upside. And as we can see historically, this has usually had a pretty bullish impact on the Bitcoin price action. I think right now, again, I don't know exactly when you guys are going to be seeing this, but as we film this, we've been in this period of choppy consolidation for a little while, hovering between kind of $120,000 just beneath our current all-time high and around $108,000 where we set a local low. And this has kind of been the tail of this cycle so far, where we've had these big phases of expansion, big volatile breakouts to the upside, and then long periods of boring, choppy consolidation and let's be honest, boring price action. And I think a lot of people maybe think that because the institutions are here, this time is going to be different to what we've seen historically, where we've had these big parabolic moves for Bitcoin. We are just going to see this step up in price action, which of course comes with its pros and cons. It's a little bit less exciting, but it's probably more sustainable. We're not seeing these big 40, 50, 60% intra-cycle drawdowns, but at the same time, we're not seeing these big exponential increases to the same extent. But right now, the Bitcoin volatility on a quarterly basis, so on a 3-month basis, is pretty much at the lowest level it has ever been. Now, volatility is very similar to price action. It's cyclical. Price has bull and bear cycles. Sentiment goes from fearful to greedy, and volatility goes from contraction to expansion, like a spring being pressed in and exploding. And when we see periods of Bitcoin volatility this low, it usually does not last long, and it usually requires a catalyst, potentially some pivoting from the Fed, potentially some other macroeconomic conditions or stablecoin supplies expanding. Of course, there's lots of different things we need to look to for confluence, but the point is these periods usually do not last for very long. And the fact that we're now seeing this as we're approaching Q4, historically Bitcoin's strongest season of performance in between October and December, gives me some confidence that we can have a pretty explosive end to 2025. Now, will this lead to a lengthening cycle? As I said, it kind of depends exactly how this plays out from a monetary policy perspective. I could see this cycle extending into Q1 and potentially Q2 2026 if we see the business and liquidity cycle also extending as well. But I think if we see a big explosive blow off top for Bitcoin before 2026, well, that's technically a lengthening cycle. What's a couple of weeks between, friends? I'd say that's pretty much still following the 4-year cycle. And to be honest, until we see some hard evidence that that isn't the case, then to me, I'm still treating that as our base case.
That's a good one. So before we go on and talk about indicators, indicators that you're using, I wanted just to retouch on, just to do like a summary of why you think that this time it is not different, and like some of the biggest types of things, long-term and short-term holders, and any other kind of indicators that you talked about. I think it's important to give a little context. So let's see what you got.
Okay, so this is a very interesting one. Now, I actually made this as part of our site subscriber analysis piece. So obviously you don't need to be a paid subscriber to use Bitcoin Magazine Pro. A vast majority of all of our resources are free, but occasionally I'll do some, well, I say occasionally, it's once a week, it's on a very fixed schedule. I'll do these weekly analysis pieces where I try and dive into the data a little bit more. Now, this is looking at the ETF inflows and outflows, but averaged out over a 28-day basis. So rather than just the day-to-day, not randomness, I'll say, but the sporadic increase or decrease, which may be against the trend that can potentially warp short-term data and outlooks. If we average this data out over a month or 4 weeks, 28 days, we can kind of gauge the, I won't say institutional because not all ETF buyers are institutional buyers, but because we're associating these ETF buyers with being at least smart money, high net worth individuals, potentially pension or fund managers, also accumulating through these ETFs, which are definitely paying a big proportion of these accumulation buyers, we can actually see that they're not actually very good at accumulating Bitcoin. People seem to assume that because these guys have deep wallets that they can somehow foresee what the market is going to do. They can somehow predict Bitcoin much better than anyone else has done previously. But what we can see is when this graph is showing negative values, it indicates that we've had an average month of Bitcoin ETF outflows. And historically, this has coincided with Bitcoin market bottoms since the ETF launch. Now, as I said, I did this analysis piece a few weeks ago, exactly coinciding with the local low that we set around $107,000, $108,000. So this is something we put out to subscribers to say, this is an area in which accumulation to counter trade the institutions that we thought would come and just kind of annihilate all Bitcoin retail traders and just make the market their own, are still susceptible to the same human psychology and behavior and investor habits that everyone is. As I've said, just because you have deeper pockets doesn't mean you're not susceptible to these same behaviors, these same patterns that have happened, not just in Bitcoin, but throughout all markets and all assets in general. You can look back to the 1700s for the South Sea bubble. You can look back to the dot-com bubble, the global financial crisis. Almost all of these markets were driven by institutional and large funds and big players in the market. And they like to follow the trend. They don't like to bet against the trend. They like to try and squeeze out as much as they can. And if anything, this is going to exacerbate the big moves that we see in Bitcoin. Now, I know I've talked a lot here, but I think this is a really interesting point to make as well. So this is just on TradingView. Again, just the standard BTC USD chart. And a lot of people are saying, we're seeing diminishing volatility. We're not going to see a big blow off top for Bitcoin. But what I can do is, in this cycle already, we've already seen 5 instances where Bitcoin has had at least a 65% move in less than 100 days, or around 100 days. Now, that might not look great. Of course, you can look back to previous cycles and say, yes, but this used to be very commonplace in Bitcoin. This cycle has been very underwhelming, very boring. But realistically, if we were to copy any of these previous pieces of price action, again, right now, from the local lows that we set, before the end of the year, we would reach at least $175,000, if not $220,000. And this is price action that we've already experienced. Now, I don't know many people, many rational analysts in the space who could see us from here, mid-September, go to $200,000+ in just a couple of months and say that's not an impressive and not a parabolic move. This would be very typical of Bitcoin. And again, just very quickly, a lot of people also like to point towards the previous cycle, the 2021 double peak, as an underwhelming top. What if we see a double top like that one? Well, we can do a very similar analysis. Everyone was very underwhelmed at the time. We surpassed our all-time high at that point. Everyone was screaming for 100K. But if we, again, just replicated the percentage gains we saw at this period in time, this very underwhelming move that we saw in Bitcoin, and overlay it onto the current price action, we'd see a Bitcoin of nearly $250,000 before 2026. So just because the institutions are here does not mean things are different. The more things change, the more things stay the same. Every cycle is going to have a different narrative, and I would love to be proven wrong and see this big super cycle of Bitcoin traveling to $500,000 and lengthening into 2027 and beyond. But human nature cannot be avoided, and all of this on-chain data, all of the macroeconomic derivative data is really just mass psychology quantified.
Right, and I have to agree here. On what you just said, especially for 2021 and double tops and people saying, you know what, this should go higher because it has to. Bitcoin is the hardest asset ever created. And there are so many institutions coming in, and Michael Saylor is guaranteeing essentially that we won't have these major drawdowns or these big crashes. But I have to tell you, if we take a look at 2021 to now and we do the exact same thing, yes, we could hit up to 220,000. But if we go back to 2013 and then 2017 and 2021 and we take a look at the gains, there are diminished returns, correct?
Of course, yes, but this is to be expected for an asset that's gone from a few $1 billion to a multi-trillion-dollar asset. And diminishing returns doesn't necessarily mean that we have to have underwhelming returns. They're not one and the same. We could have diminishing returns and still reach $300,000 this cycle. I think the 2,000% low to high returns we saw last cycle would result in about 330K. So diminishing returns, if we reach 300K, I'd take every day of the week.
Yeah, I'll take it. So there are different people watching this video. There is one set of people who are saying, okay, this is not going to change. This time, it's just the same thing. There's other people that say, no, this is totally different, and we're going to just keep going. And maybe some small pullbacks, just like we had the gold ETF in 2004, and it kind of went up. However, I will remind people that gold even has its days. And even though we like to think that Bitcoin is a store of value, I sure think it is. I believe Matt thinks it is. There are many people out there that do not see it like that. And I will just ask everybody in the watching this video right now, of the people that you have talked to, your family, friends, and loved ones, how many of you actually convinced to buy Bitcoin? Has it been 75%, 80% of people, 50%? My guess is probably not that many. And I think it's the same thing as we take a look on the global stage as to how many people are going to actually get it and understand it and keep it and not sell it. And that's just talking about Bitcoin. Now, we talk about altcoins and things like that. That's even worse. So if we have a big pullback in the traditional markets, expect Bitcoin to pull back as well, maybe a little bit more than traditional TradFi, and take a look at altcoins as they probably will crash and burn. That is my opinion. But Matt, if we have these two people, and one people say, you know what, this time is different, I'm holding forever, fine. And those people might be proven right. On the other side, there's people like, you know what, I've been around for quite some time, and I just don't believe that this time is different, and human nature wins out. So if that is the case, then what are some indicators that you're looking for when you're going to start to offload? And that could be Bitcoin, that could be altcoins. And then, of course, if you have these indicators, how do you set up alerts and all those things for you?
Yeah, great question. So there's a few parts to that, and one that I'd like to touch on briefly before looking at how we're going to sell the exact peak to the dollar in my entire stack, which of course every influencer is going to do, is when we talk about this time being different, I like to try and back it up with some maths and facts and data. Of course, being an analyst, I try and be very rational, but of course, if I'm saying, yeah, we could replicate this, and we've already done this, this is still kind of based on if, buts, and maybes. Whereas, as I said, I like to look at real data and try and prove to some extent that this thesis is at least somewhat correct. So this is the supply adjusted coin days destroyed. So very quickly, the coin days destroyed is almost measuring the velocity of Bitcoin transfers. So for example, if I held 1 BTC and transferred it after holding it for 100 days, I would add 100 coin days destroyed to this metric. Now, to also add 100 coin days destroyed with 0.1 Bitcoin, I'd need to hold for 1,000 days. So it's multiplying the BTC held by the length of time it was held in days. Now, by doing this and aggregating all of this data together, we kind of get an understanding of when the biggest Bitcoin holders who've been holding the longest period of time are beginning to actually start offload some Bitcoin, start taking some profit, which, I mean, if you've been holding from a few dollars and you've held a decade, you know, you probably deserve a nice new Lamborghini or a new house or whatnot. But what we can do is just look at a direct comparison. So the supply adjusted just means we're regulating the current circulating supply at the point of this metric being calculated. So if you look back to here, the previous cycle, pretty much the exact same value on the supply adjusted coin days destroyed as we recently saw in this cycle. But here the price was around $9,500. This is in June 2020. Now we reached this peak up here. The most amount of selling we saw in this big move, this is a 90-day average of coin days destroyed, by the way, which saw the price reach $36,000. So pretty much a 4x. We saw Bitcoin's price do a 4x for this amount of selling. In this cycle, we go back to when this started. So the Bitcoin price was around $34,000, which is again, pretty much the exact same supply adjusted coin days destroyed 90-day average at this point. The Bitcoin price was $34,000. Now to reach, again, an incredibly similar peak in this metric, so the same amount of long-term large-scale holder selling, price had only reached $68,000. So it only doubled, and we'd seen the same amount of selling that in the previous cycle saw Bitcoin quadruple. So we're seeing diminishing profits before we see large long-term holders begin realizing some profit. And again, this is very natural. Bitcoin isn't going to see volatility as sustained over multiple months and cycles when we've become a multi-trillion-dollar asset. And again, in the second and third peak we've seen in this cycle so far of more sustained selling, the Bitcoin price went from $70,000 to just above 100, so only about a 50% increase. And then following that, the most recent one from around $93,000 to just beneath $120,000. So again, an even smaller, less than 25% increase in the Bitcoin price action to get the sustained level of profit taking. So this is investor behavior changing and adapting and just becoming more in tune with the evolving market dynamics of Bitcoin. Now, you asked previously, what metrics will I be looking towards to try and time the Bitcoin cycle peak? It's a very difficult question. Of course, it's going to be easy in hindsight. We're all going to look back, look at this one metric which worked perfectly, and everyone's going to rely on that next cycle. And like I said, every one of us is going to sell the exact top. So it's going to work perfectly. But of course, that's not the case. I always suggest to react rather than predict. It doesn't matter if the Bitcoin price is at $150,000 or $250,000. If we're seeing lots of profit taking from big long-term holders, retail FOMOing in, the derivatives market getting crazy, probably a good time to start consider scaling out. But one that I'm going to be looking towards is the MVRV ratio. So I'll just very quickly go back. I know I've been kind of skittering around charts a little bit today, and that is, well, this is the 2-year rolling version of it. I'll just very quickly get the normal one. So this is looking at the average accumulation price of Bitcoin. This is aggregating every single Satoshi transferred, so we can see the average buy or sell of Bitcoin. And once we mash all of that together, we get this cost basis or this realized cap. Now we have the MVRV Z-score here, which is standardized for the volatility, which we can see has pretty much been a holy grail indicator throughout all of Bitcoin's history. But I need to assume that it's not going to work as well this cycle. I need to look for confluence. So what I can do is just look at the raw MVRV value. So rather than standardizing anything here, we're just looking at the pure ratio between this realized cap or price and the underlying market cap or price of Bitcoin. Now I'll go back to TradingView here. And what I've done is just draw bands around this MVRV ratio. So just multiplying it by multiple different levels. So the blue line is just the standard realized price, which should just be an MVRV of 1 if we're there. And then beneath that, I've got 0.75, 1.52, etc. Now what we can see is every single Bitcoin cycle, we've actually experienced diminishing returns, which again plays into the standard thing you'd expect to see, the standard reaction you'd see in an asset which has gone from a few $1 billion to a multi-trillion-dollar asset. We can see back here in 2017, we reached this very upper 5x MVRV ratio. In 2021, we reached this red line, the 4x MVRV ratio. So if we are to continue this trend of diminishing peaks in this, then maybe this cycle we just reach this orange MVRV ratio, this 3x level, which is currently sitting around $160,000. But do keep in mind, these are moving targets. So we can almost extend these out. Now, of course, it's not going to play out exactly like this. The data's changing, it's ever evolving, and we can't predict parabolic moves. But judging by their current slope, their current trajectory, we could say at the end of 2026, this orange line would be somewhere around $175,000. Now, if we're looking at metrics like this, which of course look technical just from this point, it's lines on a chart, but are really actually based in investor emotions, buyer behavior, looking at predictable patterns that we see within the Bitcoin market, we can see that they typically peak at the same time on this MVRV ratio. We can see they typically bottom out at the exact same level on this MVRV ratio. As I said, it's mass psychology quantified, and the fact we can aggregate all of this unrealized profit and loss to see how investors are likely to react based on historical patterns, it gives us some good indication, and alongside some confluence from, like I said, some macroeconomic and derivative factors. We can't obviously guarantee that we're going to be scaling out at the exact peak, but we can try and really maximize our odds of getting the best bang for our buck if we are to scale out of Bitcoin, which of course you don't have to do.
Absolutely. So this is just a good easy indicator to take a look at. Not that people are going to get all the way out. Now, me personally, I'm going to sell, and I've talked about this numerous times on the channel, 95% of my altcoins this cycle. And then for Bitcoin, it was at 50%, but that has been decreased. It's looking at 25 or 20% because I feel like Bitcoin's been the most battle tested. It's been around for quite some time, but I have to take some profits because I just pretty much have to. I still believe that there's going to be a big pullback. So again, Matt, what you're saying here is a couple of things to take a look at: MVRV Z-score, MVRV Z 2-year rolling average, and then what any other indicators that you'd look at just to say, okay, well, let me cross-reference that with another indicator.
Yeah, I gave a little sneak peek there just as you was talking. And again, just something I'd like to add on to what you were saying is that I often also get a little bit of criticism and slack by saying that I will be taking some profit on my Bitcoin positions this cycle. But this isn't like I'm going to be selling my entire portfolio. I think investors need to remember to think granularly. No one suggests going all in at the Bitcoin bottom. They realize that that's a difficult thing to do. People suggest dollar cost average into the market. Now you can just do the opposite. You can dollar cost average out of the market when we start getting a little bit overheated. And keep in mind, I get paid in crypto. At some point I need to eat. I need to pay for clothes and food and houses and stuff. Sometimes it makes sense to maybe rotate out, and it's sometimes, even if you don't want to sell, you can think maybe now's not the best time to rotate in. But again, looking at a perspective from retail FOMO. Now this is an interesting topic, but looking at the realized cap HODL waves, I'll just quickly outline it first. This is showing the influence on this realized price or realized cap by different age bands. So we can look at the different colors on this chart to show the 1 to 3 month, for example, which is this slightly light orange one, or the darkest one here, which is within 24 hours. Now what we can see is when these very warm colors move very much to the upside, it indicates that new market participants are paying disproportionately more for their Bitcoin than their long-term holder counterparts. Now, as you can see, this typically aligns with Bitcoin cycle peaks. Usually new market participants FOMO in as Bitcoin's topping out, and people that bought Bitcoin at substantially lower prices are more than happy to sell to them. And we can see we've already had 2 distinct peaks in this cycle, rising peaks. And another thing that I'd just like to add on to this is people might point to the ETFs or treasury companies and say, yeah, but they're not really showing up in this data. If they're buying spot Bitcoin, they are. Any spot Bitcoin that's ever bought, transferred, sold is coming up in this on-chain data. So even if the ETFs are purchasing to never sell again, if Sailor really is buying and then putting it in cold storage and we're never seeing it, that's going to show up in the data. Now I know there may be conspiracies of paper Bitcoin, etc., but a vast majority of Bitcoin that's actually being traded is real Bitcoin because we can track it happening in real time. So if I can start seeing lots of confluence from unrealized profits on the MVRVZ or just MVRV score, the technical factors looking at the MVRV bands, and then retail FOMO coming in as well. Again, these all just kind of add to the probability that I think that we're getting at least a little overheated, and I can just start scaling out 0.5% here, 1% there, and just try and lock in some profits, again, with the goal of trying to reaccumulate at lower prices later on in the next bear cycle. And just another thing that I'd like to quickly point towards is, as I mentioned previously, the potential for a big parabolic move this cycle. When looking at this chart, people think, but we're not going to have a big retail FOMO this cycle. Maybe people were too over allocated to altcoins, they got wrecked, they don't want to touch Bitcoin again. And that might be a valid thing. We might not be seeing as much retail FOMO this cycle as we have historically done. If we look at Google search trends, we can also kind of see this, but I don't necessarily think we have to see this cycle. If we look at gold, just over the past 18 months or so. From January 2024, the gold market cap was around $14 trillion. Now, we all know gold's been on this massive exponential rally over the past few months, but it's increased over $10 trillion in its market cap. Now, over the same time frame, Bitcoin's increased by about $1 trillion. What you need to take into consideration is that Bitcoin doesn't move $1 in, $1 up. I didn't explain that very well, but if someone buys $1 of Bitcoin, injects $1 of capital into the market cap doesn't increase by $1. It actually increases by slightly more than that due to this thing called the money multiplier effect. Now, a very simple way, it's not the most accurate way, but it's pretty damn close, way of calculating this money multiplier effect is just by looking at the percentage of Bitcoin that is technically illiquid, held by long-term holders and not readily available for new market participants to buy. So we can look at the long-term holder supply of Bitcoin, and it's currently around 15.5 million once you take into account the circulating supply of 19.8, 19.9, somewhere around there. The circulating supply of long-term holder Bitcoin takes into account around 70-ish% of circulating Bitcoin, somewhere around that region, 75-ish, which if this is 75% of all Bitcoin is held by these long-term holders not willing to sell, then this would result in a money multiplier of around 4. So any $1 coming into the market would actually increase the market cap by $4. So if we wanted to see Bitcoin hit this 220,000, around a double from here, 2x, $4 trillion, keeping in mind gold has increased around $10 trillion in the past 18 months alone, and we have a Bitcoin money multiplier effect of around a 4x. Of course, these are all changing values. If we were to see just $500 billion, just $500 billion, this would result in a Bitcoin market cap increase of $2 trillion. This is only 5% of the gold market cap increase we've seen since January last year, rotating into Bitcoin to see a potential 2x in the Bitcoin market cap. Now, these are supply and demand economics and dynamics that work so incredibly well in Bitcoin's favor that it's hard to fathom just how small we are as an asset and how parabolic things can get with literally just the rotation from other assets without the need for fresh capital coming in from new buyers.
So right now we've got 3 good solid indicators to take a look at. MVRV, 2-year rolling, realized cap HODL waves, long-term holder supply. Anything else you'd put on there before we take off?
So you mentioned previously about getting some alerts as well. I'm going back to a couple of questions ago, I think, here. So again, I think a great way to actually try and aggregate all of these together, because I'm a bit of a data nerd. I can happily sit in front of 150 charts all day, scrolling through data, looking through code, and just nerding out, just really enjoying it. But I think the biggest outperformance from Bitcoin Magazine Pro isn't just the fact that we can help simplify, but we can massively reduce the amount of time you're actually needing to spend doing this analysis. Because if you're not a data nerd like me, if you're just an everyday person just looking to steadily accumulate some Bitcoin, you don't want to be spending hours in front of the charts every day. You want to be outside enjoying the sunshine, doing whatever, spending some time with family. So I actually rely on these alerts a lot just to make content and just to give myself some own decisions and investment and analysis advice. But if you go to the alerts you hear, and you do need a site subscription for this, I know, terrible shill, but once you go through here, you can actually turn on alerts for a vast majority of our indicators, so you can actually get some insights into when things are happening in real time. If you want to know when the R-HODL ratio, something we didn't even cover today, is starting to cross into cycle high territory, bang, you get an email alert the moment it happens. And even if you're not necessarily just interested in BTC, maybe you wanted to dabble in some treasury companies. Recently, we've added alerts for strategy itself, MSTR, so you can keep an eye on when the MSTR MNAV ratio is coming into a high multiple or decreasing or increasing substantially above a moving average. And all of this, again, like I said, just helps to save some time, so you can piece everything together. You get 3 or 4 emails when multiple metrics are pointing towards one thing. You know to take action. You can remove the emotions out of it. You don't have to listen to your favorite YouTube, Twitter guru who's selling you a favorite trading course or whatnot. You can just take a very unbiased, almost robotic approach and look at the data that's historically backing this up to show and to prove that these are steps that can provably improve your Bitcoin investing and analysis.